It's Tuesday, the 3rd of September. It's the second business and markets day for the new month, which effectively wraps up the third quarter of the year. I am hosting number 5. This is your Frontier Open Bell. Thank you everyone for coming through. This is what the first Monday, the first trading day of the business week across many jurisdictions really look like if you discount markets such as Egypt, where trading started in Cairo on Sunday, actually the first day of the new month, where the EGX was positive by 0.2%, but fell back 0.55% when the rest of the region reopened for business yesterday. 30,731 on the EGX 30. If you look at the top of the table, that's what you got, the NGX. Nigerian market started about a quarter of a percent in positive reading, 96,793. We did about 13,000 transactions yesterday on the NGX. That was a very big jump, the biggest for the entire month of August, by the way, and starting off what's it called is a takeoff, a very big takeoff yesterday in terms of sentiments on the Nigerian market. The banking sector, the big names came yesterday in view, as well as the oil and gas sector. Of course, you know the story already. Nigeria State Oil Corporation owing roughly $7 billion to oil traders. We can get full supply into the country. The State Oil Corporation is highly leveraged. It's got a whole lot of forward contracts. There's a fuel scarcity across the country impacting energy, transportation, food, and everything else in between. Schools are going to reopen over the next few days. It's going to be a more tough time for Nigerians, with economies asking the president to revisit the dual policy of fuel subsidy removal and, of course, foreign exchange. But let's move on with the rest of the markets. We'll get to those headlines in West Africa. Let's go to BRVM, 0.84%, a very big jump to the upside. The Ghana stock market was down 0.27% to start the new month. In Nairobi, the stock market was better by 0.8%. That's 104.5 for the all-share index, while the GSE fell 0.32%. Surprisingly, with the rest of the emerging markets, well, a little bit tepid on Monday, 83,483 reading. Let's take that down and look at the top headlines as we start the new week. That's the East African headlines. The Green Climate Fund has approved $150 million for EFDB's climate program in the Horn of Africa. Those countries within Ethiopia, Burundi, Somalia, Somaliland, and the rest of them. All of those countries are within the Horn of Africa's region, and this will help them mitigate the impact of climate change. In the meantime, Nairobi Stock Securities Exchange is set to open what is called a fractional investment program. Effectively, 1st of January 2025. You can now buy fractions of shares in the stock market in Nairobi. And that's a new way of getting more folks into the market. If you feel Safaricom shares, one share is too big for you, for example, or KCB or Equity Bank, now you can buy a fraction of those shares, of the single share of Safaricom, perhaps for a lesser price, and get you the foot in the door as far as it is. It's going to be an interesting time. Let's wait for that and see. In the meantime, the World Bank has appointed Kwame Alfan as the new country chief for both Kenya and Uganda. Congratulations to him. And Kenya is onboarding new digital tracking for all state officers' foreign travels. Look, there's no money to waste. So you've got to travel as a government official in Kenya. Moving forward, the process, the visa, the tickets, hotel, accommodation, feeding, everything would have to go through the new digital system to ensure that every shilling is worth your travel. And that's the new horizon that President Ruto's team is putting in place. And finally, East Africa, South Sudan and China have signed a new deal by agreement to build modern oil refinery. Everybody's building refineries these days, and I'm beginning to lose count, by the way. It looks like that's the new go-to business for oil-producing African countries. Let's move on. Let's check into West Africa. Of course, Nigeria is hurting right now. Petrol scarcity. NNPC admitting it's owing oil traders, international oil traders at least, and that's making it difficult to get full supply into Africa's most populous and largest economy. So anxious there, the government has been asked to revisit its dual policies of last year. Exchange rate unification, as well as fuel subsidy. The economist at a CFG advisor and the CEO, today while Adebayo was on television late Monday night, says the government needs to go back immediately and review those dual policies because they were ill-timed and unprepared in terms of social interventions that were to be on ground before those policies were announced in June, around June last year. Keep that in mind. That's according to CFG Advisory. In the meantime, Africa is looking to sign roughly $3.5 billion in business agreements with Indonesia at the conference which started yesterday in Bali. And the head of the APPO, that's the African Petroleum Producers Organization, Dr. Farouk Umar, is attending the West Africa Energy Summit starting today in Accra, Ghana. He'll be speaking to a number of issues, including a just energy transition for Africa and the reason why the World Bank, the OECD, and international oil companies should continue to invest in Africa's energy sector. And that was what NG Ayuk, the head of the African Energy Chamber, spoke to in a statement, lengthy statement released on Monday, that Africa faces massive poverty and economic hardship if those big international institutions decide not to invest in Africa's hydrocarbon industry. I'm taking it further to Southern Africa, and the administration of President Ramaphosa is looking to at least 50 billion rand income from SANRAL. SANRAL is that agency responsible for roads, motorways, whatever, in South Africa. There are, of course, some new tax coming for using the highways, as it were. So that looks like something good for the government. In the meantime, Leseja Kiagago, the head of the South African Reserve Bank, or the central bank, says inflation has to stay pat. In other words, low inflation, stay muted, in the manner of speaking, to allow a change in monetary policy stance. South Africa is looking to hold another MPC meeting later this month, in just about 2.5 weeks from now, around the 16th of the month. Let's see how the SCRB will decide with inflation slowing down in the month of July. Let's see what things look like. In the meantime, RBZ, that's the Reserve Bank of Zimbabwe, has injected $190 million so far into the FX market since the introduction of ZiG, the new currency. The currency is flagging. It's about the 15th attempt by Zimbabwe to float its own national currency, and the current attempt will remain in place, according to the country finance minister, who says all will be done and that the central bank will continue to defend the ZiG currency and will continue to intervene in the FX market for what you call operational stability or efficiency, in a manner of speaking. Zambia, 3 hours of electricity per day on a rotational basis. That's crunching for Zambians. Bad news likely to happen. The Kariba hydro power plant may be shut on September the 14th. Water level down now below around 10%, and that's quite dangerous. The drought of El Nino is causing massive water shortfall in Zambia and a few southern African states, including Zimbabwe and Malawi. Finally, in earnings, ZB Bank of Zimbabwe is reporting half-year net interest income up by 20%, total income down by 41%, profit before tax was a negative 58%. It's paid as a profit of 1.05 billion Zimbabwean dollar. That's for the first 6 months of this year. Let's roll it up to North Africa. Of course, Libya in the news. Yesterday, the National Oil Corporation formally announcing the force majeure at the El Seal oil field, which was installed 110,000 barrels per day, doing about 80,000 barrels per day. The force majeure is being a major issue for Libya since last week, when shutdown was announced by one of the provisional administrators in the divided country. The whole rift of what it's all about, who heads the central bank and who has access to the central bank. This is also political tussle, by the way, with some folks campaigning for election to become the head of this oil-rich North African economy. In the meantime, Egypt and Asia's Infrastructure Investment Bank, the AIIB, is discussing how to invest in the private sector, the OPS, in Egypt, as well as renewable energy sources. Egypt is reportedly this morning secured about $200 million, I beg your pardon, from Saudi Arabia and Libya to get gas supplies into the country to support its energy needs. And finally, Egypt is looking to launch the country's first digital bank in the fourth quarter, and that starts effectively 1st of October. Still in Egypt, the Treasury is looking, or the Ministry of Finance is looking to issue Treasury bills and T-bonds worth about 506 billion Egyptian pounds for the month of September. See how it goes on a weekly basis. And finally, Morocco is reporting air traffic jump to 18.1 million passengers in the month of July. Congratulations for being a major hub in that region, Morocco, that is. And that's your today's Frontier Opening Bell. I am Bosun Omofai. Do have a great Tuesday. And let's get together tomorrow, Wednesday, to continue from here. Bye for now.